click, go to properties, you're gonna deactivate your camera, and you're gonna activate it again, and then it's up. Wow, perfect. Alright, so where are we going? That's crazy. I got a lot of. Welcome back to another study hall, guys. I'm thinking I want to be done with learning this from Ameritrade, so let's do some research. Market, coupon codes, latest offer. What did I look up? Ameritrade. Okay. Sorry, I'm having a fat brain fart right now. Alright, so. Hmm.
Hi, it's David Aquino, and I just wanted to say thank you for picking up a copy of my free options ebook, which will arrive in your inbox in about 10 minutes. And when you get it, I encourage you to go through it because you're going to discover a lot of great tips and strategies that will help you be a more profitable trader. But while you wait for that to arrive, I want to share with you a unique options technique that's perfect for turning a small options account into a sizable trading account capable of producing large and consistent weekly income streams in just a few months. As with all things regarding the markets, I can't guarantee results. But what I can do is share with you successful experiences some of our traders have had. Like Jim H. from Tyler, Texas. Jim applied this options technique I'm about to tell you, and in his first month, he grew his $23,257 account into a $29,959 account, and that's an increase of 28%. In the second month, the account grew to $32,979, and in the third month, it grew to $45,073. Guys, that's over $21,816 in net profits. That's a 93.8% growth in just 90 days. As you can imagine, Jim was very happy with the results Here's the text he sent me about this. In fact, he used some of his trading profits to buy a 45-acre plot of land in Texas, which you can see here. Now, Jim has kept growing his income. His trading accounts that he trades today generates over $10,000 in weekly profits. What's important here is that Jim did not try every trading technique under the sun, which is a common mistake most new traders make. Instead, he began by mastering a simple technique big trading institutions like banks and brokerages use to make fortunes for their shareholders. I've spent 24 years working for big firms like Merrill Lynch and Vanguard, and I'm very familiar with how they do this. This is what I taught Jim, and it's what allowed him to make over $10,000 in weekly profits. And it's the same technique I teach new traders I coach when they're first starting out. And I've now organized this training into a special outline workshop titled How to Tap into Secret Income Streams That Banks Don't Want You to Know About. In this video training, I'll show you the fundamental secrets that big banks use to make fortunes for their shareholders. And you'll see how by sticking to the 4 golden rules, you'll prosper just like institutional traders. Jim did, and he's still profiting from it today to the tune of $10,000 per week. And I know you will be successful too. Now, because you and I are just getting to know each other, I'd like to give you a very special one-time deal. The regular price for this trading program, How to Tap into the Secret Income Streams That Banks Don't Want You to Know About, is normally $197. That's a very good deal when you compare it to the weekly compounding profits our secret income stream traders bring in every week. But because I want you to start out with an advantage in the markets, I'd like to give you access to this training today for one payment of $7. No, that's not a typo. Just one payment of $7. This will get you on the fast track to potentially life-changing weekly income streams. Why only $7? Well, I've taught thousands of traders, and I've found that the fastest way to get them to be profitable traders is to give them a foundation of trading based on what works in the markets. Tell them the truth, show them how the big institutions make money. This gets traders thinking and acting in ways that will lead to success. By giving you such a good price on this training, I will be doing my part to help you get serious about learning and give you one of the best ways.
That's a technical analysis and wasted a whole 15 minutes listening to this guy talking about his court. Analysis is a study of historical market data, including price and volume, using insights from market physiology or behavioral economics and quantitative quantitative analysis, technical analysis, aim to okay. Let's look up quantitative, qualitative, and quantitative. Sound like a school teacher. Quantitative analysis of situations, especially the financial market, by means of complex mathematical and statistical assistant assessment tool, technical skills test, coding assessment, top 10 evolution tools, top 10 data analysis tools, industry leading systems, free stock market data and depth. What the hell is this? Product measures, benchmarking, dashboard, key performance, strategic planning, and visual analysis. Um, so I'm confused. But we don't stop here. Let's just click on the first one and visit. The WYN difference. The WYN Enterprise is a real time BI solution that empowers you to visualize data fast and make smarter decisions. The difference is in the simple, transparent licensing model that accommodates business growth. That empowers. Okay, they're very selective words. Please enter your business email. Yeah, bro, that's my business email. Oh my god. If you guys want to know how to get a business email, I'll just show you right now. So I should rename the fucking video. How to get a business. Oh my gosh, I just make a business account right now. Bro. Wow, attack. One one. Wow, attack 1-1. God dang. All I have to do is change the 7 to an 8. Fuck you. 7 to an 8. Fuck you. Come on, man. Are you stupid? That's what I did. That's it right there. Bro, that's weird. Visual gallery. Blog. Knowledge base. Technical support. Develop resources. Videos. This is not making sense to me. Maybe I asked Google the wrong question. Nice. What's a call option? Okay. Alright. How do I get started with call options? In life, you are required to make choices about many things from day to day. This applies to your investment strategy as well. You must decide what stocks you want to own or sell. But calculation or immediate option contract is about your future choice. Your investment strategy might be simple: buy stock in a good company with attractive earnings, growth, or dividend yield potential, or you hold. I got gas on my desk. I almost blew that shit away. Or you hold several stocks or index funds in your account to spread the risk. The old eggs in several baskets approach. You may want to start trading options. Hey, bro. Nah, I already have Weibo on my phone. On my phone. But get confused when scrolling through the options change page. It's also possible that you came across the options page on accident and left because you think they're only for the highly advanced trader. Let's see if we could change your thinking with more details about how call options work. Key takeaways: buying calls can be alternative to buying shares of the underlying asset. Call options can provide leverage, and option buyers can pay a relatively small premium for market exposure in relation to the contract value. More more differences. Calls revert call reverse stocks. Okay, key takeaways from buying shares, do more with less. You ever find yourself with either of these situations? When facing a stock market rally, you have to watch it from the sidelines due to limited funds. Oh snap! Where are we at? Where are we at? Dying due to limited funds. You may not know that you can participate in higher price shares even with a small account to buy calls. Call options give the buyer the right but not the obligation to buy 100 shares at the specified price. So when you buy a call option, you're not buying 100 shares directly. You're simply buying a contract that affords you control of 100 shares of that stock. Suppose ABC stock is currently trading at 157.35. Buying 100 ABC shares would cost you um, 15,735 in total. Alternatively, if you choose to buy a call option on ABC, that would be a different story. Each contract generally covers 100 shares, so it would cost 608 to control 100 ABC shares. The call buyer would pay 608 in premium to get, and the money call and call is described as the money or ITM of the market price is above the strike price. If he exercises the call option, paying another 15,500, the investor will receive 100 ABC shares. Therefore, the average cost per share would be 161 on that number. Where are we at? Thank you. The call contract above tells us two crucial pieces of info. 19 August 22. The last day the contract is valid. The buyer of the call can choose to exercise the option or trade the contract in the markup until its expiration date. 2. 155. The call buyer has the right to buy 100 shares of ABC at 155, which is called strike price. FYI, sections of expiration and strike price are two important steps of buying calls that influence success or failure in your trade. Okay, let me go ahead and do this one real quick. Options do not last forever. If the ABC stock price is 154 at the expiration date of 19 August 22, the stock is, the stock owner will have an open loss of 335, roughly 21% capital loss. He still keeps the ABC shares in his account and potential upward gain in the stock. If the contract is held through the expiration date, the investor will lose 608 or 100% of premium paid to open the positions. Of course, you don't need to hold it to expiration, and you can sell the calls back in the market anytime before it expires. right back. We're actually gonna do two hours of study hall today. I'm trying to chill, just learn something. Just gonna chill and learn while I'm rolling this. What we can do is help ourselves out some more. Cause I also have to use the bathroom. Give me that guy. Where's my Asian man at? There you are.
Ready to launch your business? Get started with the commerce platform made for entrepreneurs. Shopify is specially designed to help you start, run, and grow your business with easy customizable themes that let you build your brand. Marketing tools that get your products out there.
Hey, what's up, my friend? So look at this chart over here. When I first started with technical analysis, this is pretty much how my charts look like. I have things like support resistance, trend line, trend channel, moving average, RSI, MACD, etc. A lot of stuff on my chart. After all, I was thinking, the more stuff I have on the chart, right, the better I can make my, predictions in the market. But boy, I was wrong. Why is that? And simple, when I have so much things, right, so much tools and stuff on the chart, I get a lot of conflicting information. For example, the chart pattern can say buy because it's a breakout. But when I look at the indicator, it tells me that the market is overbought. It's a sell signal. So should I follow the chart pattern or should I follow the indicator? So you can see where I'm coming from. I feel very conflicted, very confused, or I'm very frustrated. It's kind of like, dating a girl. She says that, oh, Raina, I love you so much, I miss you. And every time I message her, she replies me 3 days later. What's going on? Right? If she really likes me, right, she'll reply, within 3 minutes. Yeah, so this is the same thing for trading. I feel very conflicted, right, with a lot of, stuff on my chart. And it took me a few years to kind of figure out that, technical analysis doesn't have to be this confusing. So this is why in today's training, we're going to do just that, right? What you'll learn, number one, is firstly, where exactly on the charts do you buy or sell without second guessing yourself? Man, I think I can be a poet. Next, you will learn, right, how to better time your entries and exits with precision. How to protect your account and maximize your profits. And all in all, in today's training, what we're trying to accomplish is this, to share with you a secret formula so you can profit in bull and bear markets. And this formula, it works, right, for the stock markets, the forex market, or even if you trade crypto. Sounds good, right? Then let's get started. Now, the first part of this formula is what I call market structure. The concept is very simple. Market structure wants to answer this question. What to do? What do you do in a given market condition? Because if you think about this, the market can only be in one of three market conditions. Either it's in an uptrend, a downtrend, or range. Not familiar? Don't worry, let me explain. So the market is said to be in an uptrend when you have a series of higher highs and higher lows. So if you look at this chart, look at the highs on this chart. Higher high, higher high, higher high, higher high, higher high. If you look at the lows, the swing lows, higher low, higher low, higher low, higher low. You get the message. And you look pretty much from left to right of the chart, you see that the market is heading up higher. Let me ask you, when you see the market in an uptrend, do you want to be a buyer or a seller? It's not a trick question, it's a logical question, and the answer is you want to be a buyer. Reason being is that when the market is in an uptrend and you're a buyer, your upside potential is a lot higher. Look at the magnitude of the up move, right, when the market is in an uptrend. So if you look at this, when the market goes up, this is the huge upward movement, right, if you're a buyer. Huge upward movement. Huge upward movement. See the potential, right, that the market can move in your favor when you're a buyer in an uptrend. And if you think about this, right, if you are a seller, this is pretty much the amount of potential profits that you could get. Notice that the move is so much smaller. So this is why in an uptrend, as much as possible, you want to look for buying opportunities. And later on, I'll share with you where exactly to look for buying opportunities. But just understand this concept for now. Next, a downtrend. This is just the inverse. In a downtrend, you'll notice that the price makes a series of lower highs, lower highs, lower highs, and lower low, lower low, and lower low. So you look from left to right, the market is pretty much heading down lower over time. So one thing about the markets is that it doesn't go down in one straight line. It goes down lower, makes a pullback, then goes down lower, makes a pullback, goes down lower. Same for uptrend. And question, in a downtrend, do you want to be a buyer or seller? You should be a buyer. Just kidding. You should be a seller, right? Look for selling opportunities, right? Because again, the concept is the same. If you are selling in the downtrend, look at the profit potential. This is the amount of profit potential that you could get, right, towards the downside. This is the magnitude of the move that you can expect. This is the magnitude of the move that you can expect. Whereas compared to, buying in a downtrend, you look at the profit potential. If you're a buyer in a downtrend, notice that this is the move that you could possibly get over here. The move is a lot smaller, right, compared to the downward momentum. And finally, range market. So range market is where the market is just pretty much contained between the highs and lows. So if you look at this, contained between these highs and contained between these lows. And let me tell you a secret. When the market is in a range, right, I don't just randomly, buy the lows of support or sell the highs of resistance. In other words, I don't simply blindly, buy over here or sell over here. Actually, right, what I do is that I still will take a direction when the market is in a range. Sometimes I might look to buy at support. Support in the range market, and sometimes I would prefer to sell at resistance in the range market. I'll explain to you why shortly. I have actually this particular habit, right, and you'll discover why shortly. But for now, right, if you think about this market structure, right, seeks to do something simple, right, which is to tell you what to do in a given market condition. For example, those of you who are watching this video, you're married, you have a wife or girlfriend, whatever. If you know that your wife is in a good mood, right, this is where you can, sort of take advantage of it, ask her for a massage, ask her to make you some sandwich, a nice meal, and whatnot. Okay? And if your wife is in a bad mood, you're gonna stop asking her for favors. In fact, you're probably the one doing favors for her to make sure she is her bad mood doesn't get worse. All right. So it's the same for trading, right? You will adjust your trading strategy according to different market conditions, and same thing for your wife, right? You adjust your treatment to her according to her mood swings, right? So same thing. You have to be adaptable, to be flexible, and market structure will give you kind of like a framework to know when to buy, when to sell, and maybe even when to stay out of the markets. And by the way, if you're enjoying the training so far, smash the thumbs up button. If not, hit subscribe.
Yes, it does take money to make money in trading, but what if someone else provided you with the trading power of a $100,000 funded account, along with expert trading alerts to help you learn to win consistently, allowing you to make $30,000 each month in profit without risking any of your own money? It has never been a better time to learn to trade financial markets. Right now, more money is being put into the financial markets today than ever before, and recent events have contributed to increased volatility, creating a fantastic environment for traders who can profit whether the market goes up or down. This makes trading recession and inflation proof. Imagine the financial and personal freedom you could create for yourself and your family if you had an expert with a proven system and proven signals to help you obtain and scale your own six-figure trading account through a funding partner. Members of Funded Profits Trading Academy from all over the globe are doing just that right now. Members learn how to effectively trade on their own using the proprietary trading signals developed by our founder, Luke Holmstrom. Members get access to see Luke's live daily trades in real time, so you can trade the same setups. And when paired with a funded account, people have seen 10 to 30% gains per month, helping them achieve that six-figure earner title. With this process, we make trading way easier, more lucrative, and way more fun. The beauty is that this trading style can be done anywhere in the world at almost any time of the day, and solely using a smartphone. Here's how it works. First, you go through the Academy's 8-week training, which includes weekly live calls with Luke that covers trading style and strategy, technical and fundamental analysis, psychology, and so much more. During the training, you practice with different trading tools to get a good feel for using the trading alerts provided by Luke and your own trading analysis. You use a $100,000 demo account to get familiar with Luke's risk to reward strategy and train up for the real challenge, unlocking the funded partner's $100,000 live trading account. Once you're consistently profitable and managing risk, you move up to the two-step evaluation process. If you pass our funding partner's evaluation, you are given $100,000 in funded capital to trade with, and you get to keep most of the profits. Funded Profits Trading Academy is with you every step of the way during this process, so you can get on with trading in a short amount of time as possible. It can take as little as 20 days or up to 90 days to get certified and go from zero to trading with $100,000 in funded capital. The program is an online, interactive, educational experience that includes video learning, worksheets, weekly live calls with Luke, and real-time trading signals right to your phone every trading day. Whether you're a beginner or an advanced trader, we take away all the guesswork, all the stress and make it easy for you. What this means is you can go on about your day-to-day life without worrying about risky trades and losing money. Having money and the time to enjoy it is why people get into trading. And that's what our system is founded on. Students of the Funded Profits Trading Academy are successful with only putting in 4 to 5 hours per week. So this program is easy to incorporate into an already busy life. The process starts now by clicking the button on the screen, filling out an application form, and booking a free discovery call with Luke to see if you have what it takes to join the Funded Profits Trading Academy. No experience required, just a commitment and desire to change the trajectory of your life. Simply click the button below this video to fill in a quick application form to join the Funded Profits Trading Academy and get your free discovery call.
If you're using useless retail trading charts like this, please quit trading immediately. Just stop, unless you enjoy throwing money down the drain, of course. Now this is what real financial institutions look at when trading professionally. They can see real buyers and sellers inside the candlesticks. Can you see the difference? The two are not even comparable. This is just gambling. This is proper trading. I should know. I spent years trading for one of the biggest banks in the world, Barclays Investment Bank, and we weren't using junk like technical analysis and random lines on our chart, like I see spoken about on this channel. So you can see why you have no hope of making it in trading if that's the type of stuff you're looking at. Easy solution. Stop sabotaging yourself with random retail lines on a chart that a child could draw, and start looking at the right stuff, the stuff institutions are looking at. So how can you do that? Easy. Now my name is Nirav, and in just one single free video, I'm going to show you how my colleagues and I, working at one of the biggest banks in the world, ran rings around retail traders like yourself, simply because we had access to the right information, and we knew retail traders like yourself were wasting their time using the same stuff as kids on social media and YouTube who don't actually have a clue how this works in a professional firm. Firms that do this every day, making millions. Now you can continue doing what you're doing, but as I think you already know, there's much more to this business than a bunch of random lines on a candlestick chart. And in just one video, I'm going to show you exactly what you should be doing, and it's just gonna blow you away and completely turn your trading on its head. Not to mention your results. How can I say that so confidently? Because I'm the only 100% fully audited institutional trader on the internet, and in the free masterclass you're about to watch, you'll even get access to all my fully audited results. Something no retail educator ever shows, because they don't actually make any money. They're just very good at showing off a lifestyle paid for by you. Let's change that today. So what are you waiting for? Click the link below. It's a free video, so you have nothing to lose, but an incredible amount to gain. And by the end of it, you will know exactly what professional traders like myself are doing in the biggest trading institutions in the world. And you'll see it's the complete opposite of anything being done on social media or YouTube. Click the link below. I'll personally see you on the other side.
Okay, the second part of the formula is this area of value. This one is to answer the question, where do you buy or sell? Where exactly do you, on the chart, do you buy or sell? And to answer this question, you can use a very powerful technique or concept called support and resistance. So let me explain what this means. So support, right, pretty much means, right, that it's an area on the chart where buying pressure, where buyers could come in and push the price up higher. And resistance is an area on the chart where sellers could come in and push the price down lower. Let me show you right on the chart what this means, right? So if you look at this chart, this market, as you can see, this dollar against the Japanese yen, it's in an uptrend. So we want to ask ourselves, where on this chart, right, should we look for buying opportunities? Where is support on this chart? So if you were to look at this, right, here is how I would draw support. I would look for areas on the chart, right, where the price bounce off higher, right? The more significant the level, right, the more attention I want to pay attention to it here. So for example, over here, I noticed that, hey, you know, the market has actually bounced off support, right, twice. Tested once, toing, came back down, tested twice, toing, second time, right? So this is an area of support I want to pay attention to. Another one, notice here again, how did the price actually bounce off higher from this lows to where it is right now? So what I'll do is, again, I'll draw the area of support somewhere about here. So one thing about drawing support and resistance is that you don't need too many lines on your chart. Sure, I can draw more levels. So for example, I can draw over here, I can draw over here, but I wouldn't want to do that. Why is that? Because if you think about this, if the market were to, let's say, come back all the way down to this level, or even down to this level, would I want to be buying at that area of support? Not a trick question. And the answer is no. Why is that? And the reason is simple. If the price does get to this area of support or even over here, at that point in time, right, the trend has already shifted from an uptrend like this, okay, to a downtrend. And when the market is in a downtrend, I don't want to be buying support. I want to be selling resistance. So this is why when you draw support and resistance, right, pay attention, right? The two most recent areas are pretty much the most significant ones. The rest are, I would say, secondary. And if the lower point of support gets touched by the market, probably the market has already shifted to a downtrend and you don't want to be buying support, right? That's what I've shared over here. So usually I just have the two most recent area of support on the chart like this. Now, I have drawn lines, but for those of you who want to take things a step further, maybe you want to, look at it in terms of an area, you can use this tool over here, right? This rectangle tool, and just highlight it as an area. Whatever color you like, those who like red, right, have it in red. Those who like pink, have it in pink, blue, whatever. And this is another one that you can draw over here, right? So you can see now you have these two areas of support on your chart that you know that, hey, these are areas on the chart that I want to look for buying opportunities. Okay, so let's do one more example before we move on. How about we look for a downtrend this time around? So euro against the US dollar. Okay, so as you know, in a downtrend, we want to look for selling opportunities. So let's find the two most recent area on the chart where, hey, the price has, come down lower from it. So if you look at this, here is one, and here is possibly another one. And one thing that is interesting that if you're unaware of is that whenever the price breaks below support, right, it could become resistance. So for example, this was previous support, the price breaks below support, now retest as previous support, become resistance. Okay, so this is again another area of support that you can see over here. Support, a little bit of support. Price breaks below it, previous support, become resistance. So same thing, right? For previous resistance, the price, let's say, this was previous area of resistance. Price breaks out of resistance. It could now become support and head up higher from here. Okay, so this is what I want to share as well. And again, likewise, if you are not comfortable looking at lines on your chart, you prefer it to draw as an area, the rectangle tool, right, is a very useful tool that you can use, right, to help you highlight the area on your chart, something like this. Okay, so now you've highlighted on the chart, where do you look for buying or selling opportunities, right? The next question now is this. Okie dokie, the third part of the formula is this, entry trigger. And it simply wants to answer this particular question. When exactly do you buy or sell? So for entry trigger, this is where candlestick patterns are really useful. And I want to share with you two popular ones, right? Very useful one that, will help you in your own trading. First one is what we call the hammer. Let me walk you through, right, how this works. So the hammer, when you see a hammer candlestick pattern on your chart, which you'll see shortly, what it tells you is that the market opened at this price, okay? And it closes at this price, right, at this particular level over here. This over here is the highest price point, right, for the time frame. So if you look at this hammer, let's say on the daily time frame, this tells you that this is the highest price point for the day. And this is clearly over here, this lows is the lowest price point of the day. O is the opening price of the day. C over here is the closing price of the day. So very simple. So the story behind the hammer goes something like this. So this is where the market opened today, right, at this price point, okay? Then the sellers took control and pushed the price down all the way down to this lows. And then the buyers, clearly they got pushed to a corner. And then suddenly, they regain the strength. No, I'm not going to tolerate any of this any longer. They go, they start pushing the price up higher, right? And finally closing right near the highs of the day. So this tells you that at the early part of the day, right, the buyers, they were overwhelmed by the sellers, but they found the strength, the courage to push, right, the market in the opposite direction, to push the market up higher, and finally closing with signs of strength for the day, closing near the highs of the day. So this is kind of like, for those of you who watch Avengers Endgame, right, towards the end of the movie, Captain America is just alone, right, against Thanos' army. Okay, and that at the point of time, oh man, that guy is screwed, right? One guy versus like a few 100,000, right, soldiers and bad guys.
But yeah, we already been over all this in past study halls, but we can keep going over it, get it hammered into the brain. You know what I'm saying?
Some looks like
Same thing with video games, works on IRL skills.
No, I don't know what they look like, right? And then suddenly, right, while about to fight, right, the big battle, he hears something, right, to your left or something like that. I think then after that you saw the Birdman come in, right, his friend, right? Then after which you saw, who do you see? Black Panther, right, and the army, Wakanda forever. You saw that, right? So after which, right, that ending is, of course, right, the good guys, Captain America, they won the bad guys. So you can see that emotional aspect, alright, of that scene, right, it's similar to the hammer candlestick pattern, right, where the buyers at one point in time, they were getting overwhelmed by the sellers, right. At these lows is where, Captain America is getting screwed, right, by the army, and then slowly the Birdman came up, Black Panther, Wakanda forever came up, and, they win the war, right, and close, right, on a high note, right. So it's kind of like the candlestick pattern, the hammer, right, if you ask me. The other candlestick pattern, right, before I talk about the other candlestick pattern, is that, so in short, right, when you see a hammer, it tells you that there is a bullish signs of strength. It tells you that there are buyers stepping in, right, and they are temporarily in control. So when you see a hammer, right, it doesn't mean that you blindly, hit the buy button. No, you also have to look at other context, right, like, the market structure, area of value, etc. But once you have all those, right, and you see a hammer, that tells you that, hey, now, it's a time that you could possibly enter the trade on the next candle open, right? So again, I'm getting ahead of myself over here, but I want to tell you that the meaning of a hammer is that the buyers, they are temporarily in control. Likewise, right, when you see a shooting star pattern, right, this is kind of like the inverse. Over here is where the market opened. They opened at this price point. The buyers were in control, right, early part of the day, right, and then the sellers finally say, that's enough, right, and then it pushed the price down lower and finally closed near the lows of the day. So of course, this is the highs of the day, and this is the lows of the day, right, assuming this is a daily candle, right, this is the lowest price point of the day. So a shooting star pattern is kind of like, you going for exam, man, you didn't even study for your exam, right? And then you realize, man, I got A for this exam paper. So you're really high on cloud nine, and only afterwards you kind of realize it's A for absent. Right, the whole world come crashing all the way down, closing near the lows over here. So that's kind of like what the shooting star pattern sort of mean, right? At least that's what I think of, right, when I think of the shooting star pattern. So these two are very useful entry triggers to help you time your entry to know when exactly to buy or when to sell, right? Especially when you come across these two candlestick pattern. And as a bonus, right, one last thing I want to share with you is what I call the false break setup. This is not really a candlestick pattern, but it's a price pattern. So for example, let's say this is an area of support, okay? The price comes down to support, it bounced up higher, they came back down for a second time. So a false break pretty much means, right, the price actually break below support, and traders thought, man, support is breaking now, it's gonna collapse lower. And next thing you know, the market quickly reverse back up support and close back above support. So this is what I call a false break, and this again is a very useful entry trigger, right, to time your entry to go long. Don't worry, later on I'll share with you some charts so you can see exactly how all this entry trigger fit in the big picture. All right.
Do you trade options? Did you know that nearly half of the market is traded behind closed doors in private off-market exchanges called dark pools? This is where the big institutions, hedge funds, and top traders execute 90% of their trades. How can you expect to win in the market if you can't see these trades? Trade Algo has the most comprehensive real-time dark pool monitor available to the retail trader. Our proprietary advanced algorithms identify stocks that are set to surge based on abnormal.
All right, so when it comes to exit, there are two questions, right, we are trying to answer over here. First one is this: exit when you're wrong. So where do you exit your trade if you're wrong, otherwise known as a stop loss? So when it comes to stop loss, right, I have a very simple principle. Your stop loss must be at a location, right, where if the price reaches it, it will invalidate your entire trading setup, your entire trading idea. Let me explain. So let's say, for example, you're looking to buy at support. Okay, price comes up, you buy at support, price up, it goes up higher over here. Where exactly do you set your stop loss? So a mistake that many traders make, right, pay attention, is that they simply set their stop loss somewhere here or maybe somewhere here. Number 1 and number 2. And those are horrible places to set your stop loss. Why is that? That's because the market could easily just swing back down lower and then reverse up higher from there. So you can see if it does, like what I'm showing over you here, a false break, whether you set your stop loss at level 1 or level 2, you're going to get stopped out. So now how should you set a proper stop loss then? So this is what I recommend. When you set your stop loss, set it away from an area of value, or set it away from an area of value, away from price structure. So for example, again, go back to our support example. So let's say this is support, price bounce up, comes back down, bounce up higher. And this time, let's say you buy over here, let's call it E, or your entry. Your stop loss, right, you want to set it at a place somewhere about here, because at this point, right, let's say S over here is your stop loss. If the price, right, were to reach a stop loss over here at S, let me ask you, do you think that support, right, at this point in time is broken? And I think for most of you looking at this drawing, you say, yeah, support is broken. And yeah, since your basis of entering the trade is to buy at support, now support is broken, clearly you should get out of the trade, exit the trade, because this is where the market has proven you wrong. So whenever you set your stop loss, you want to set it at a level, right, where the market will invalidate your trading setup. Let me share with you just one more example, right, because it's so important. So let's say you're looking to trade the bull flag pattern. For those of you who are not familiar, right, a bull flag pattern is where the market, let's say, breaks out, it forms like this out. It's what we call a bull flag pattern. And then let's say you breaks above the highs, you buy. So this is what we call a bull flag pattern. Now, at what price point, right, where if the market reaches that level, your bull flag pattern no longer looks like a bull flag pattern? I'll give you 3 scenarios. Point 1, point 2, or point 3. What do you think? I know this is a little bit of a trick question. And then let's say you breaks above the highs, you buy. So this is what we call a bull flag pattern. Now, at what price point, right, where if the market reaches that level, your bull flag pattern no longer looks like a bull flag pattern? I'll give you 3 scenarios. Point 1, point 2, or point 3. What do you think? I know this is a little bit of a trick question, and answer I'm actually looking for is actually more towards point 3. Because if you look at point 1 and 2, right, this low over here, right, is where buying pressure could come in. This is where potential previous resistance could become support. So if you set your stop loss at 1 or 2, the market can actually hit down lower, bounce into support, and then go up higher. And if you set your stop loss at level 1 or level 2, you'll probably gotten stopped out of the trade. But if you set it at 3, this is where you're giving your trade more room to breathe, right? You're setting your stop loss away from this price structure, away from this area of value. And that kind of like, put the odds in your favor, because you're not going to get stopped out prematurely or too easily, yeah? So this is what we mean by exit when you're wrong, right? You're setting a proper stop loss. Now, what about exit when you're right? Where do you take profit? So there are different ways to do it. You can, use like, capture a swing, ride a trend and stuff like that. But for now, we keep things simple. We talk about capturing a swing. So let's say, again, the market, let's say it's in a range, okay? Goes up, comes down, goes up, comes down. Let's say you buy at support, right? And where on this chart, right, might sellers come in? Where might sellers come in and push the price lower? And as you know, this is an area of resistance. This is where sellers might come in. So this means you want to set your target profit, right, just before this area of resistance. So maybe somewhere about here is a good level to set your take profit level. Because if the price goes up, right, come into resistance, you take profit, great, right? Because what could happen is that the price comes into resistance and then quickly reverse down lower. So if you set your take profit level, let's say over here or over here, you're making the market work hard for you. Making the market, break out of resistance to reach your target. And if you were to make the market work hard for you, you will usually, pay the price. Yeah, so as much as possible, right, the market is the big boy, right? Follow the clues, right, that's being left behind by the market, right? Don't try to, push your luck, right? But rather respect the market, respect the price structure. If you know that this is an area where sellers might come in, right, then be conservative, right? Set your take profit level just before that area of resistance. And this will kind of like increase your odds of actually, exiting a trade with a profit. So these are 2 very simple guidelines, right, that you want to take into account, right, when setting, right, your stop loss and target profit. So now I've shared with you the entire formula, right? If you realize it's what I call the May formula. A quick recap: this stands for number 1, market structure, area of value, entry trigger, and exits. Later on, which is about right now, I'm going to share with you examples, right, trading examples, right, to see how this particular formula allows you to profit in bull and bear markets, right? Let's get to it.
bro, you gotta use
So you
the
want to know where to
beeper,
invest
'cause I got
$1,000
stuck
right
in my
now?
grandma's
Well,
house.
forget about stocks, real estate,
And
or
I-
cryptocurrency.
and
There is
I
a
went to
little
the,
known
gas
trend
station
taking
and stuff.
America by storm right now called
Alrighty, so let's walk you through a few examples using the May formula that you've just learned. And also along the way, I'll share with you some advanced price action trading tips, right, to help you better time your entries and exits. So first part of the May formula, what is the market structure, right, based on the chart that you are seeing right now? Did I hear uptrend? Well done. Okay, so the first thing we have is the market is in an uptrend. And as you know, right, if the market is in an uptrend, then we are looking to buy at an area of value, and in this case would be an area of support. Okay, so let's see, right? So I think in this case you can draw this area of support over here. I'm going to just draw this line briefly. Okay, I can draw it as a rectangle, right, but I'll just leave it as a line for now. So let's see and wait, right, and see how the price reacts at this area of support. So as you can see over here, the price came into support, and then over here we had a nice looking reversal candlestick pattern. I won't really call this a hammer. I think it's more of a false break. So earlier you learned that one of the entry trigger is a false break where the price tick out below this lows and then quickly reverse back above support. So this is a classic example of a false break. So in this case, you can actually enter on the next candle open and set your stop loss a distance below this low. So let me take you a step further, right? How can you actually set an objective stop loss? So usually what I like to do is to actually set my stop loss, in this case, right, 1 ATR below this low. So what is 1 ATR? ATR stands for average true range. It measures the historical volatility of this currency pair. So you just go to indicator, search for ATR, pull out this indicator, and you see something like this line over here. So I usually like to go with the 20 period setting. Since there's 20 trading days in a month, I go with SMA and click OK. So that's the settings I usually use. So over here, what you can see over here is this number, 1.401. We'll take it as 1.4. What this means is that over the last 20 trading days, this currency pair, dollar against the Japanese yen, moves an average of about $1.40, right, per day on average. So about 1.4 per day. So what I will do is I will find out what's the low of this candle. So in this case, the low of this candle currently is about 130.39. So I'll take 130.39, 130.39, and I minus 1 ATR. And you know 1 ATR, the value currently is about 1.4. So I just take minus 1.4, and that gives me, based on my trusty calculator, right, it's about 128.99. So the value is 128.99. This tells me that my stop loss will be placed at 128.99. So if I were to do that, right, is let's say my stop loss, I'm going to put it over here. So I put it over here. Okay, let's put this line to let's say red color to represent the stop loss, and let's say it's at 128.99. Okay, click OK. So at this point, right, you can see that this level over here is your stop loss. Right, this level here is your stop loss. What about entry? You can look to enter on the next candle open. So let's see what happens the next day. Next day, the market opened pretty much where it closed over here. So this is your entry price. So I'll just put a green candle over here to signify the entry. Okay, let's just, I mean a green line, right, not a green candle. Yeah, so this is a green line, okay, and done. Right, that's your entry. What about exit? So if you remember, right, to exit a trade, we usually want to exit our trade before opposing pressure come in, before the sellers step in. So in this case, you can see that this over here is a swing high over here. So ideally, we want to exit our trade before this highs, before, you know, selling pressure come in and push the price down lower. So what we can do is we can set our target profit somewhere about here. I usually don't like to set it at the extreme highs because it may not get to the extreme high. So I set it usually a few pips below it, somewhere about here. Right, let's set it to, in this case, let's say blue color, shall we, for target profit. Okay, and let's see what happens next. Right, as you can see, next day the market, right, got us filled into the trade, and then it moves up, moves against us. When in our favor, starts to stall, boom, right, now it's moving against us. So at this point in time, you would notice that your open profits has evaporate, right? You're now probably sitting in the red, and many traders will be tempted to, you know, just, you know, take the loss and move on, right, and, you know, prevent further damage. But think about this: you already set your entry, your stop loss, and your target. They all plan ahead of time. Your stop loss is at a logical level. You set your stop loss at this level because this is where you're giving your trade enough breathing room to breathe, right? Because, you know, what you know is that the price, for all you know, it could retest support here and then go up higher, right? And you don't want to, you know, have your stop loss being too tight, right? Because you could get stopped out prematurely. So let the trade do its thing. Your stop loss is already pre-planned ahead of time. Follow the plan, right? And let the market do what it needs to do. So let's see what happens. The market stalls, right? Forming something like a dragonfly pattern, right? Then it starts to head up higher. Red candle, some slight indecision. Then it goes up higher, great. Up higher, great, right? Moving up in our direction again, finally. Up again, fantastic. Yes, almost there. So close, right? So at this point, traders might be tempted to take profit, but remember, you already set your target ahead of time. It's planned, right? Let the market do its thing. So in this case, right, you can see shortly afterwards, you would have gotten exited this trade for a profit, right? So again, this would have been a winning trade. So that's pretty much how the May formula works, right? And for now, let's move on to another example and share with you a different type of exit that you can consider. Now, let's have a look at another example, shall we? So again, the May formula, I'll just do a quick recap here in case, some of you have short-term memory like me. M-A-E-E, right? May one. Ask you, what is the market structure that you're seeing on this chart over here? This is the New Zealand Canadian, the 4-hour time frame. What is the market structure? The market is in a downtrend, right? Great, right? Market is in a downtrend. So you know that the market is in a downtrend, then where will you look, right, to trade from? Where is the area of value that you want to pay attention to? In this case, area of value is at resistance. Fantastic, right? So let's cover this first too. So market is in the downtrend. Area of value, I'll probably highlight this one over here. Okay, that's probably the key one that I'll pay attention to. And let me just change this to black, right? So we don't get confused later on with our entries and exit. Okay, and again, for those of you who prefer to have it drawn as a rectangle, you can. It probably looks something like this, right? As an area on your chart, right? That's perfectly fine. So all that's left to do, or rather the next thing to do, is to wait for the market to come towards your area of value, or in this case, resistance. So you can see the market head up into resistance, okay? Breaks into resistance at this point, and this candle over here, we have a valid entry trigger. This is what we actually call a bearish engulfing pattern. The story behind it is similar to a shooting star pattern, right? Where the
What's good, bro? Money is up, man. Let's make a money plan. What's your money plan? I know that's what you called me for.
Bro, how'd you know? I was over here freaking, I was watching your stream and shit, and my boy's literally learning stocks, bro. What the heck?
Oh yeah.
Oh, shoot. What you been up to though, for real?
A lot of things. I would actually have to pause my stream for that one because, matter of fact, it doesn't even matter if they know if they're not fast enough to react to it. That's what I always say. So,
What do you mean by that? You got like a fucking, you cracked the code for stocks or something?
no, I cracked the code for Baki. You remember Baki?
Bro, you look like him now? What's good?
No, that's not even it, bro. I'm gonna be the strongest, fastest, and most likely the smartest man alive pretty soon here. Give me about
I
a
fuck with
year or
that
two.
mindset, dude. I fuck with that mindset. Oh God.
And
You'll
richest.
be fucking, you'll be him in no time.
That's what I'm saying. I'm gonna have so much fucking money, bro. But I need
Dude, you should just change your last name to him. Let me stop.
That's what I'm saying. But I'm gonna need. I can't do it alone. I definitely am gonna need help. So I'm glad you like making money, man. But Hispanic people are always muy bueno at what's it called, dinero. So.
Yeah. Yeah, well, I guess you could say that. And if you have someone who speaks Spanish in your team, whatever you're doing in the future, I can speak to them clients in Spanish and then get us guap. You know what I mean?
I'm saying, but I'm also learning Spanish too.
Bro, I got you with Spanish as well, bro. Whatever you need help with, I got you with that. We have to hang out soon though, too. Are you still living in the same place or no?
No, I'm actually in Jax right now, but
In Jacksonville?
yeah.
Bro.
What's up? What's the issue? I can still work down there.
You can. It's just you're far, bro. I'm kind of miss it when you live down the fucking road.
Yeah, no, I'm just an hour away.
That's not too bad. We can still work with it. We got cars now. Well, I don't have a car, but I got my license to drive now, so we can work around it. How's your family doing?
Pretty good. They're mad at each other. They're always very emotional people,
Of course,
But
of course.
yeah, but
That's family for you.
all right. How's your little sister, bro? Is she grown up?
Yeah, she's freaking almost 10. Is she 10? No, this fella's freaking. Yeah, she'll be 10 in 6 days. Her birthday's this month. You already know.
Yeah, bro. She
Mom's
was.
chilling. Sister's about to grow up. I'm trying to make money because money's a fucking
Yes, I'm saying, bro. I knew that was the exact reason, bro, because like that's the only thing I talk about with my niggas, bro. That's all we talk about on.
Yeah, I've been freaking watching your streams. Like, I'll pop in like every day, and you're either fucking working out or learning. I respect it. 100%. I respect the grind.
Yes, sir. Oh, and I'm still gonna be a pro video gamer too.
Bro, I seen it. I be seeing you on Fortnite still, and I'm like, okay, ain't no way he never stopped playing Fortnite.
No, bro, I did it. I took a year break, bro. That's why I'm ass. I swear to God, I took a year break.
Fucking hell, I took more than a year break, bro. I have not played that. They took it off of mobile, so you know I'm garbage now. Like, I can't compete no more.
Yeah, bro. I'm sorry to hear that, man. You were really good.
On the freaking iPad too, bro. Hey, are you in
Hmm.
college or not?
Hell no, that's a scam. Why the fuck would I ever do that?
Hell yeah, let's go. I'm so glad you said that. I was gonna feel like shit if you were in college and I wasn't because like I'd be like, bro, I should have taken the leap, but you ain't take the leap, so I ain't gonna take the leap. You know what I mean?
Yeah, no. The leap of stupidity. No, why the fuck?
Literally,
Like,
bro.
I'm literally already in debt with my car. Why the fuck would I want to be in debt with
All the
college bills?
fucking loans and shit. Yeah, I'm not gonna
Exactly.
handle any of that.
Fuck that shit.
Oh, well, yeah, that's a good question. What happened? Why are you in debt with your car? Are you like financing it?
Oh yeah, no, no, I'm not in debt with my car. No, I'm not in debt at all. Yeah, I'm just financing it.
Okay, okay. So technically you are in debt, but you're not. So I feel you.
Yeah,
I got
yeah,
you.
basically.
So wait. You're financing your car? That means you had to have gotten a good car. What'd you get, man?
Oh no, I didn't get a good one. It's just $8,000, but it's Nissan Altima, two
Ooh, what
door.
are we talking about? That's a good car, dude.
Oh okay. Well, yeah.
I was gonna say it probably don't look like fucking Dodge Challenger, but like, hey, it's a freaking Nissan, dude.
Nah, it's not compared to what you were whipping, bro. I wanted a Jeep so bad.
I was whipping in a Jeep. I'm not whipping in no Jeep, dude. I have no car.
Like,
Oh, the car you saw us at Hooligans, that was not my car, bro. That was
yeah, when we were at Aldi's smoking.
nah, bro. That wasn't any of our car. That was my father-in-law's car. That guy is a freaking goated mechanic. He can build anything from thin air, and he pretty much built that car from thin air. So
Man, bro, that's crazy. But
yeah.
listen, what was your proposition? Because I have a few.
In terms of like what, like money plans, business ideas, what do you mean?
Like all of that, like
All right, so hear
money
me out.
plans.
Hear me out. It's very easy to get loans from the bank. Well, I wouldn't say easy, but we get a loan from the bank, right?
Right.
Oh shit, I fucking missed a thing.
It's
We
okay.
get a
I have
loan.
good credit. Me and my homeboys do.
Say what now?
Me and my homeboys have good credit. Well, I do. I don't know about them, but I have good
That's
credit.
good. That's good. So even if you don't have good credit or you do, we build up your credit, right? We get a loan. We use however loan. Whatever. Let's just say we get like a freaking it's hypothetical. So 100K, right? 100K loan,
Mhm.
and we put let's just say 20K into all the permits we need to make a business, right? Like a power washing business. Because on God, it's Florida.
Mhm.
It's fucking summertime. Whenever it's summertime, everybody needs to fucking power wash. Everybody needs their cars, their boats, their fences cleaned and shit. So me, you, your friend Miguel. I don't know if you're still chill with him. You probably are. That was your freaking ride or die.
Yeah.
We get all three of us and however many friends you got, and we just power wash during the summer.
Okay, so there was a mistake in that statement you made. You said a loan. No,
Yeah.
what do you need the loan for?
To buy the equipment because the equipment is gonna be a fuck ton. We
Oh,
found
so
out.
you're just a hypothetical number. Like that's not the actual loan for it. The
Oh
loan.
no. We'd have to have extremely good credit and like a little bit of money to like pull out a loan that big. We'll probably get. I can't really tell. I can't estimate, but definitely not.
The best thing I would say, either the best thing if you do really need a loan, instead of saving up for it, the best thing to do, is to gauge the price for the equipment that you need, and then ask for the loan.
Yeah. There
So.
you go. See, you already got it set up. You get the. Let's just say all the equipment we need. Let's just say we get a freaking trailer with all the power washing equipment we need. A good trailer with good equipment. I'd say 10K,
Yeah.
including the truck, or 20K, because like we're gonna need a truck to haul shit around. You know what I mean?
Yeah, so okay, yeah, I understand that. So let's before the loan. So are we gonna have like IRL jobs with doing this while
Well,
doing
yeah,
this?
this power washing company, since it's we're gonna be the ones owning it, we just gotta get an LLC and EIN.
Oh yeah, no, no, I'm not talking about for our business. I'm talking about like just in case like something happens, like maybe Miguel gets shot and I have to go to his funeral, but I can't take time off from our business. I have to take time off from my job because I have to use my job to pay my what's it called? Car off.
I see what you mean. Well, no, he was making a hypothetical. Let's just say he said hypothetically, Miguel were to pass, and you can't really take. He has to take time off of your regular job, right? Not the power washing job, right? We're talking about going to a friend's funeral. I was about to cry. Nah, 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 nah. No friends are dying here.
No friends. But yeah, let's look up the equipment. I don't think the the loan for a truck is as pressing as the our actual power washer itself. Because I think like if we start, we could just do it locally and like pull it where we can pull it or put it in a car or a truck. I could trade my car in for a truck or something, and we could put it in a truck. But
That's true. We could do that. That would save us money for the truck, a brand new truck type shit. So that'd
mhm.
be smart.
And yeah, and then we get a lot of money, and then we could get like 20 trucks, and then hire a bunch of teenagers to go do it for us.
Yeah.
Child labor. What? What?
Hey, bro. Maybe you gotta go this way. I got you. Hey, that's facts. So that's the plan. That's one of the plans. I have hold up. I'm not gonna fucking fully make it. Okay. Sorry, I'm door dashing as we speak right now because I need block 24/7 all the time.
Felt.
But so there's one hypothetical. There's one business idea. Power washing. Another business idea is me, you, Miguel. We save up like $1,000, not each, but all together, and we go and we take a real estate class. We learn about real estate, and then we just go freaking flip houses and shit.
Oh, a real estate class? Like, no, bro. Like, me and Miguel are very versed in that already. He builds houses, bro. Listen, it's in his
Oh
name.
God.
Yeah, listen, it's in his name. He builds houses, bro, and I'm good with managing. I'm like real estate, like managing real estate. Like, no, 'cause I know a lot about it. I've studied it before. Like, you know how I'm studying trading right now?
Uh-huh.
Yeah, that's what I did like when we did that when we were like 15. But then he started building houses with his dad, and I just kept learning stuff because I didn't have enough capital to actually act on it. So I was just
I
like, I'm
feel
gonna
that.
just
I feel
learn
that.
as much as I can.
Oh, you got so intelligent, bro. Holy moly. Yeah, I was gonna say, bro. Freaking not too long ago, you got a referral for like grabbing someone's winky, and now my boy's like, yo, but yo, you remember that? That was crazy. Anyways,
Yes, bro, I do remember that.
bro, I'm always gonna remember that. Anyways, damn, Miguel's building houses, and you're freaking just learning everything known to man and getting shredded. All right. You have a TikTok,
Yeah, I do. I do.
and you work out every day just because strong body, strong mind. It's always good to work out, right?
No, I want to like destroy the economy.